Thank you for joining us, everybody. It's always a pleasure to have you. For those of you who haven't formally met me yet, my name is Megan Stang, and I'm here to bring you Connect.ca's Realty's October 2024 market newsletter. So, there's been a lot of negative press in the market over the last little while, so I really wanted to start off with some good news. Home sales across Canada have hit a 7-month high. So, many factors are at play with this, but really the Bank of Canada cutting the rates this year has brought some really positive sentiment back into the market. So buyers have some increased purchasing power now, and more people have the ability to afford a home. So, do we expect a massive spike in home sales over the next few months? No, but we do expect a gradual increase, is more of a realistic expectation. And these next few slides will explain why. As we take a look at these, you'll really start to notice that the market stats indicate that many people are finally making decisions. And we'll go through and show you them now. So this slide, for example, the TREB Market Watch, it's a really good, just quick overview of showing some of the key points that we're going to go more in depth about. So one, home sales are up over 44% year over year. Like that is a big jump. Two, new listings rose up by 4.3%. And lastly, number three, despite faster sales and tighter inventory levels, the average home prices have actually still remained relatively even from the same time last year. So if you take a look at here with the TREB average prices, it's been a really tough go on the market since February of 2022. That's essentially 32 months of tougher times in real estate. So let's leave February for a second and focus on July of 2022. In July, this is really when they lifted that rates by 100 basis points kind of out of nowhere all at once. And we've been fairly stagnant in pricing ever since. So we like to kind of focus on that, saying that that's kind of the floor of Toronto pricing. So, but now as you can look further on the right side of the graph, in this slide direction, that we're finally starting to see that we're heading upwards in the pricing trends. What we always tend to see first before prices increases is that sales volume increases. We finally saw that this month. So this chart is great. It paints a clear picture of the year-over-year stats when comparing last October to now. A 44% increase, like what a jump. This October was the third busiest month in the last 13 months, and that means beating most months in the spring and summer markets as well. So why or how did this happen? Many things have contributed collectively to the uptick in transaction volume. So some of them, we know that two of those are the points that there were two rate decreases, 3/4 of a basis point each. We know the bond market has moved down because of inflation, is starting to get under control. There was a really cool CMHC announcement, which will start the effect in the market with coming down months from now. It basically is saying there's more people that are able to say, okay, maybe, hey, I can buy a little bit more house now with a little less money down. And that was a really cool add to the market as well. Outside of Canada, the US rates have come down and the US election is also now behind us. So with all of these changes, October sales were up 43% prior to many of those positive changes fully even affecting the market. So that's another really big positive coming down the pipeline. The other thing to really take away from these stats is that the prices haven't really moved yet. As I said earlier, sales volumes move first and then prices start to follow after that, which is what we'll really start to see in the stats in the coming months. So we're not at a point where we have that super low inventory like we've experienced in the last 5 years, and that's a good thing. So this is kind of me saying to a bolo to any of our buyers at Connect, we are trying to encourage you to be in the market now, because now is a good time and a great investment strategy. For you to make a great investment decision, you have to be in the market, and the timing couldn't be more right now. So with that being said, let's move into a little bit of a history lesson between average home prices and overnight rates so you get a little bit more of an understanding. This slide here, it really illustrates what exactly happened relative to the market. So if you see here, when you're looking at it, the COVID vaccine got the media attention back in November of 2021, and the prices, the red dots, started to skyrocket in the months following. But the Bank of Canada actually kept the rates too low for too long. So those nearly non-existent blue dots on the bottom of the screen, you saw the average prices started to rise. And then those blue dots, the Bank of Canada then had to make a big change because inflation had hit 8% because it was too low for too long and it wasn't coming down on its own. So they hit the brakes really hard. And you can see when the blue dots went up, what happened to the red dot prices and the market because of it, because the prices of the homes were dropping out and staying more stagnant. The Bank of Canada, just in these last few months now, has now been releasing its hold, but it's doing it slowly. It's not pumping the brakes aggressively like it did before. And that's great because over the last 5 months, you can now see where we're starting to trend today. Like I said before, this will take time. It takes a few months after decreasing rates for there to be a really big change noted in the market. So as summarized, not a lot of price growth yet. It's only a 1.1% year over year increase, but 43% more sales, 44% more sales actually. And interest rates allow roughly 20% more purchasing power today than there was in October last year. This is absolutely critical to note because buyers are starting to have taken note, or right now they're actually starting to fully take note. And they're actually starting to think, should we get up there? Should we do something? Is this a really good opportunity? And many have taken this time and taken that opportunity, which is why we see that uptick of 44% sales. As a buyer, you really want to be in the market when there's less people in the market. And that's the formula that we have right now, or we had in the past month. And this is changing quite quickly here. So if you haven't talked to your mortgage broker, or you don't have a mortgage broker, or don't know how to start, please reach out to us so we can start making some smart investment choices for you. Here we are with the GTA market stats. So as I've explained to many of you over the phone in our one-on-one chats, although our inventory is coming down, inventory overall is still up, and that's why prices have not started to move. This is normal. This is expected. We, out on the market right now, currently have 25% more choices in homes than we did at this exact same time last year. And we have like 300 times more percent of choice than we had back in the seller's market in 2021. That's such a big shift. And honestly, major opportunities for buyers right now. It also may be good opportunities for sellers, dependent on the cycle of real estate that you may be at with yourself in this moment. So as many of our sellers are buyers as well, if you're selling to purchase a larger value real estate investment, say moving from a condo to an even bigger condo, now would be the time to also capitalize on that market. The cost to step up has shrunk in the condo market. So if you're going to sell your place when everything else is also up in price, then your larger purchase would also be elevated in purchase price, and the price gap between the two would have grown. So here, the next thing we can talk about is just some key indicators and affordability gaps. So we want to address the affordability gaps here as well, because the price gap between buying a condo in the GTA versus a detached home has just broken the $1 million mark. This is actually really new, as there's been many months of trending price that has been under this dollar amount. This data actually means different things depending on the type of buyer that you are. If you're looking to buy a detached property, the market is starting to increase. So if you really don't want to get priced out, you should definitely start talking to us sooner than later. This also means that for most first-time home buyers, they won't be able to afford the big house with the lawn and the pool for their first home. But you really should be getting into the market to start building some equity. The clearest way to go about this is through condo purchases, and that's the trend that we will really start to see as the demand starts to increase. Historically, as this affordability gap grows, the prices of condos starts to increase as well. And then let's go into a little bit of the 416 versus the 905. So as the average price of condos between those two areas starts to shrink, the properties in the 416 become more desirable because of the quality of life that Toronto gives you. It's an elevated Toronto quality of life. We have the bars, we have the entertainment, you have proximity to work, parks, etc. And as Chris mentioned last month, we expected this spread to increase month over month, and it has, with the expectation that this gap will continue to grow in the months to come as the inventory starts coming down. All right, so what's hot? Here's two pre-construction projects that have many investment benefits that are currently selling on the market. So if you're looking for any of these, the platform is downtown in Kitchener. It's directly across from the Google campus. It's a 4+ year out occupancy date with only a small 10% deposit structure over the first year. It has low prices, Airbnbs are permitted. So from an investment perspective, it really is, has many great benefits. If you're looking for something at an even lower price point, going internationally to Punta Cana in Dominican Republic is a great option. We have two different projects there that we can talk about, but the Palm View also has many tax benefits. The properties are fully furnished. They have hotel management, so it's really a good hands-off approach to investing. Coming up, they're taking pre-registrations right now, is Freed Blue Mountain. So this one, if you're skiers, snowboarders, or love the summer activities outdoors, this one is directly at the base of Blue Mountain. It's also hotel managed, as well as the suites are being furnished by Restoration Hardware. So that's a big plus. This is a really awesome opportunity to use if you'd like to use the place yourself and also rent it out when you're not there. And then on the resale side of things, we have some really great listings here as well. So reach out if you have any questions about them. We have this 2-bed, 2-bath at the Keeley. It's a beautiful building. There's great location, amazing amenities. It has a great price point, and it gives you vacant possession, which are all, as we know, very desirable factors on the resale side of things. For any of the people needing 3 bedrooms, but the affordability gap is a little bit too high, there's this brand new, never before lived in condo with parking at 199 Church Condos. It's right downtown, so commuting is a breeze. Rents are more lucrative as there aren't many 3-bedroom units in the inventory, and alongside the building isn't rent controlled. So overall, I just want to thank you for your time, and I hope that this video has been informative to you. So take some time, read over the newsletter, and as always, I'm available to go over any information one-on-one if you'd like to talk about which opportunities work best for you. So until next time, please have a good day.